Hello, everybody. Hello, my friends. Hello, my family, everybody, my clients, everybody that is on the other side. Thank you for being there. And welcome to March. Today is March 4th, and I am here with your March update. We can't continue without actually acknowledging the crisis in Ukraine. We actually pray for everybody that has been affected, those that have family members there, those that are there and that are trying to exit the country, everybody that is helping, around the border, that is providing aid. We pray for everybody and for their safety and for this war to actually end soon. With that in mind, what are the impacts on our economy? So we know the stocks have been down since the beginning of the war, of course, due to instability. Everyone that has a 401k, teachers, law enforcement, anybody that has a 401k has been affected. Of course, because this is a sizable portion of their net worth, and whomever doesn't have a 401k, their home is, their net worth. And so it has been impacted. It has made an impact on people. And within the real estate market, it has slowed down the interest rates. And also there is no expert actually out there indicating that I'm following that is indicating there's a negative impact to the housing market. But what else do we know? Right. So what we know is that the demand for 2021, or for the last 18 months since the beginning of the pandemic, has been strong, right? And we know that prices are the result of a balance between supply and demand, right? And so we know there is strong price appreciation. There has been a very good appreciation. And let me show you this graphic from CoreLogic. This is showing price appreciation year over year. And so what this is a measurement where prices are compared year to the prior year, okay? And so we see that at the start of 2021, we were at 10%, and slowly it has been, or actually rapidly had been growing or increasing all the way until June. And then in July, we actually plateaued until December. In December, it actually ticked up a little till 18.5. So if we look at others that had predicted us as to how we were going to end up the year, you see FHFA had predicted 7.6. CoreLogic, again, we had mentioned 18.5, and S&P Case-Shiller 18.8. That's a lot of appreciation for the real estate residential market. And so it doesn't show any depreciation. It doesn't show the market cooling off. On the contrary, it means there's a lack of inventory, so prices are being pushed up by this demand. So what about spring, right? So what is everybody saying about spring? What are the experts saying about spring? So here's a quote from Craig Lazzara. He's the manager director for S&P. And so he says this is the highest calendar year increase in 34 years of data, and substantially ahead of 2020's 10.4 gain. Yes. So for the past several months, home prices have been rising at a very high but decelerating rate. So the deceleration paused in December as indices were slightly ahead of their November levels. Okay, so what does this mean to us? It just means that there was deceleration. There was deceleration all the way to December, and then it started picking up again. Okay, there's no talks about depreciation, nothing of that sort. Okay, so here we have a chart, another chart provided by FHFA, indicating price changes in the last year, right? The national average is 17.5. And if we look at Florida, and Arizona, Utah, and Idaho, they had increases over 25%. Let's look at another one. These are change of prices in the last year. Look how interesting this is. So if we look at Florida, it's 70. There was an increase of 72% within the last 5 years. The national average was 54.4, 54.5. And if we look at the change in prices since 1991, we see a huge increase in the national average, of course, at 258%, and Florida having an increase of 355.6%. Take that. So for those of you who are thinking we're already at the top of the market or the price appreciation, look at this. I mean, this is proof that, you know, there has been room for growth, and it has been growing since 1990s, right? So what about for 2022, right? So we've seen that in last year, we've had an increase, or a year-over-year increase of 18%. This year, the experts are estimating an average of 6.13%. Okay, now my feeling is, you know, we might be a little bit above, but, you know, that's just me. Now, what about you, right? If you own a home last year, you have seen an enormous wealth or household wealth growth, right? So this year, you'll probably see another boost for, you know, the 6% that is being estimated. And so what does it mean for those that are actually waiting to buy, right? It means you gotta buy, otherwise you're gonna stay behind, right? Prices are estimated to keep going up. So if you have any questions, give me a call. My number is 561-501-3806. I'm Paola Barrientos, and I am your to-go realtor for the South Florida market.